Hey First Home Buyers, Rick here, hope you're all well. We want to go through a few videos on some of the strategies we've used for people. This is one strategy which I think is very, very pertinent. We call it the LMI strategy, and that's using lender's mortgage insurance to our advantage. Now, what we find is that a lot of people stay out of the first home buyers market because they think they need to save the 20% deposit. So if we're talking about a $400,000 loan, that means you've got to save $80,000 and have a $320,000 loan. That becomes really tricky, right? That takes a lot of money. So what can we do? The smaller the deposit, and if you check out some of my other videos, you might find that I talk about it specifically. The smaller deposit, we have lender's mortgage insurance. Now, I get it, it's a fee, and we don't want to pay it if we don't have to, but sometimes it's just a cost to borrow money, and it's an acceptable cost. And I'm going to give you this example. If our time frame to save $80,000 on a $400,000 purchase is going to be, let's say, 10 years, well then that means we're staying out of the market 10 years and missing out on all that capital growth which we could be getting if we just jumped into the market sooner. If you tell me you can save the $80,000 within 6 months, well then I can understand staying out of the market for 6 months to actually buy this property and use that instead. So it really becomes an opportunity cost situation here for which way we go. This scenario here, we had a couple on 50 and 70,000. They had 5% in savings, or 25,000. They bought a 4-bedroom house in Clemsey for $500,000. They paid $15,000 in LMI, and your first instinct might be, geez, that's a lot of money. What we can do for most banks is add a lot of that LMI onto the loan, doesn't have to come out of your pocket. They also received the $15,000 first homeowners grant to help contribute towards purchasing this property. The end result was 2 years later, their house was worth $600,000, and so it had grown in value by $100,000. Now I'm not going to do the maths on everything else, but the net result is $100,000 growth, 2 years. They could have sat out the market and waited another 10 years. They didn't. They paid the LMI and they've got their return on their investment straight away.